Inside Options is brought to you by the Johannesburg Stock Exchange. Manage your risks with Safex style options.
Hello and welcome to Inside Options. I'm James Boardman, and this episode's a bit different to our usual format. We'll be talking option trading strategies, and instead of me supplying the educational detail, we've invited one of South Africa's most successful fund managers into the studio, Liang Du from Prescient. So his portfolio makes great use of options trading, and I'm going to be chatting to Liang about some of his strategies, and I'm sure you'll glean a lot of valuable information from him as well. So Liang, welcome to the studio.
Thank you very much, James.
Now, Liang, you work with Prescient Asset Management.
That's correct.
They're a firm based in Cape Town. I visit the guys sometimes when I go down to visits. I've never actually met you before. So what fund do you manage at Prescient?
At Prescient, I manage mainly the positive return fund, and I do all the derivative strategies across the other funds.
So you're managing sort of a portfolio of funds. You're doing a derivative strategy on top of the other funds.
That's right.
And how big is your assets under management in your particular fund, this positive return fund?
The positive return mandate has roughly around 30 billion rands under management currently.
Wow, that's a big fund.
Yeah.
30 billion rand. And how old are you, Liang?
I'm 28.
So you're 28 and you're managing a 30 billion rand positive return fund.
That's right.
That's quite some serious going. Now, your fund's mandate is positive return. Is that kind of the same as an absolute return fund?
I guess it's very similar. What we try to do with the fund is that over any rolling 12-month period, the client will never lose any money. And we've achieved that over quite a long while, over the 12 years this fund has been around.
Okay, so up here we've got a graph of Liang's fund's performance. So this is the Prescient Positive Return Fund. So you've got quite an interesting mandate here that I see your benchmark is just inflation plus 4%. As you can see from this graph, you guys have done seriously well. I mean, the fund's been going since 1998 and you've never had a negative year.
That's right. I think to point out, the red line is the inflation plus 4, which is our benchmark. And I think for any guy investing, the most important thing is to get real returns. So this fund is designed exactly for that, to give our clients real returns. What we've achieved through this period is almost inflation plus 9 since inception.
Wow.
And I think what's nice to see is, in spite of the 2001 crashes and the recent 2007-2008 massive crashes, we've never had a down year. It's very low volatility, and it's been very smooth outperforming.
So that's an amazing track record, because I mean that's something a lot of investors I don't think pay enough attention to, is inflation, because that has a humongous effect on your asset returns over time. That a lot of the returns you see, it is just inflation. So this is handily beating inflation, and that's very important to preserve your real purchasing power of your investment. So that's vital, and it seems to have been a very safe investment. So how do you manage to keep it so low risk?
I think the only way we do it is by using derivatives. I think the standard way of managing risk is using some sort of diversification, but then you're counting on chance, you're counting on statistics, you're counting on average. This is what happens.
Exactly.
And by using derivatives, we can completely eliminate the risk, eliminate the downside risk, especially from asset classes such as equities, which we use a lot in this fund.
So part of what made me call you into the studio, Liang, is you do these big derivative sort of overlay structures. So what did you guys put in place in sort of, say, 2008, before the crisis was sort of brewing and you could tell there was going to be some trouble in the market? You guys were quite proactive in hedging your portfolio. What sort of structures did you use, and what sort of instruments did you use to do some of your hedging with?
Okay, from our side, we always use Safex options, and we use a lot of put options. So put options protect equities from the downside.
Yep.
I think you say we do a lot of chunky trades. That's true, but I think a lot of people do really big chunky trades over the counter. So you don't even see that. And I think even before this crisis, we've always spoken to our clients and said, look, we've always used Safex because we like the margining process, and that keeps our clients safe. And as you've seen with the Lehman Brothers issue, you never know when things are over the counter. But mainly we use a lot of put options and futures to kind of protect our equities from downside.
So what sort of structures do you use? Because if you were to just go and buy puts outright, it's going to be quite expensive. And I've seen you guys do slightly more complicated structures. What are one or two of those you do to offset some of the cost of that put that's otherwise just going to drag on your performance quite a lot?
Sure. I think the positive return fund, of course, the mandate is very strict. So the client can never, ever lose money. So we always have puts in there. So the way we manage it is that when volatilities are low, we buy lots of options. And when volatilities are quite high, we either offset that by selling out the money calls, or what we can do is just have less equities. Sometimes we're forced to allocate to have less equities.
Okay, so you just shuffle your portfolio around. So what are the key assets you guys invest in?
Mainly equities, bonds and cash, of course.
Okay.
Equities, we use a lot of top 40 because we can hedge that very well. But in terms of bonds and cash, we can do a lot of stuff there as long as we control our duration and our risk.
Okay, so the way you were saying that the Prescient to me earlier works is that you've got sort of a fixed interest team of guys that manage that sort of section of funds. Then you do derivative overlays for all the funds, and this positive return fund is your fund that you manage entirely on your own. So do you sort of allocate a portion? Who does the overall asset allocation decisions of what goes into cash, what goes into bonds, what goes into equities?
I think Prescient runs very well as a team.
Yeah.
So we have very much a team-based process. So we all get together as an investment team, and we come and say what we see in each of our asset classes and how we value things. So we don't try to predict anything. We look at valuations. So the entire team, of course, is run by Guy Toms. He's our CIO. He oversees all of us. And together with all our inputs, we come with an asset allocation strategy that we all like, that will meet our investment objectives. And from then on, we go and apply everything.
Okay, that's an interesting approach that you do. So you just sort of discuss in committee, and the guy helps you decide where you're going to allocate the money.
That's correct.
So, Liang, just tell me a little bit about yourself. Where are you from? You from Cape Town?
Actually, I grew up in Johannesburg,
okay.
But I moved to Cape Town when I studied at UCT, and I've stayed there ever since.
Okay. And how long have you been with Prescient?
I've been with Prescient for 5.5 years.
What's it like to be a fund manager? Do you love your job?
Oh, I absolutely love it. It's one of the best careers out there. Of course, it's very intellectually challenging. It's also very rewarding. But of course, you have to be able to deal with the stress and uncertainty.
So there's a lot of stress and uncertainty.
Absolutely.
And that's sort of the downside of it.
Yes.
The long days, stress, uncertainty.
Yes. The job never ends. I mean, you go home and you're thinking about the market, and then the US opens and you're thinking what's happening there and all of that stuff.
And then you think what happened in Asia the night before as you come into the office.
Absolutely.
It's sort of like a hamster on a wheel.
Yes. Every morning you wake up, you check Bloomberg.
Okay.
Just to see that. And every night before you go to bed as well. So.
Yeah, no, it is very much a lifestyle as well as a career.
Yes.
So the markets draw you in, and that's sort of where you sit.
Hmm.
And how long have you been managing this fund for?
For about 3.5 years.
Okay. Well, after the break, we're going to be talking a bit more about some of the strategies Liang uses and some of the ways that you can use derivatives to decrease risk in your portfolio.